Good evening, everyone. My name is Paul Young. I'm going to just walk you through the Alberta budget for 2016. Now, my presentation is one perspective. I always encourage people to go out to different websites to kind of get a different view and perspective what the budget means to them, and especially the people of Alberta. Here's a little bit about myself. I basically am about solutions and looking at ways we can solve problems to make things better for people. I'll talk about the summary, but I'll frame it into different things and different pieces, that from per capita to the price of oil and just overall what's important in terms of looking forward, in terms of forward thinking. Quickly here, what I want you to gain out of this particular chart is Alberta is up in the top 3 per capita spending. Per capita spending is one way to show you how much dollars are being spent on government per resident. So it also kind of tells you whether or not maybe you're getting most efficient and effective use of dollars. Now, it's only one indication. You need to actually go back and look at the departments themselves and then look at some of the outcomes from those departments. But it's a good starting point to understand that Alberta does spend a lot more than other provinces do. Let's talk about commodity prices quickly. Oil is still hovering down low at around $37 a barrel. We're not really going to see a lot of uptick till 2019, and we may not see past 2025 anything above $82 a barrel. So we're going to see low oil prices, which is going to put pressure on the oil sands in terms of they get more efficiencies around their oil extraction process, which we're seeing with new processes in terms of steam assisted processes to extract oil, to help make those costs, bring those costs down to be more competitive. The other point with oil that's in play too as well, we need the capacity to move that oil to export markets. We've got key trade deals in play, like the Trans-Pacific deal that was signed. It opens up new markets in Vietnam, Malaysia for Alberta oil and natural gas. That's something that's critical, that should be part of the overall discussion of moving exports to market. And that's something that seems to be debated right now between the provinces, that has to get resolution if you're going to help the economy. Let's talk about the Alberta budget itself, and I'll be very quickly and succinct here. They're going to run deficits, and they feel right now they're going to spend money in areas that, like, I'll give you some good example. Capital spending in building new schools. We're looking at some climate change issues. Now let's stop there for a second. Some of this spending is not really required right now. It could be delayed to future periods. So there should have been some austerity movements in terms of promoting stuff. That's the drawback. One of the good things is they are spending some money on roads. That's good, because that helps move people around, and that's a key area that will have a future impact to getting goods to market. But what I don't see in the budget, a clear indication, is how they're going to promote more exports. And exports are what's going to drive real GDP growth. And that means we really need to add capacity. So that's up to these governments, whether it's Alberta or Saskatchewan, as well as New Brunswick, to get together to say we need these pipelines approved. We need to streamline that process, get everybody in play to get these goods to market, because we need the revenue. And that's something that a struggle for a lot of these provinces, including Alberta, is exports in Canada are 25% below capacity. If we were able to expand the resource sector, that would help. But there are some good things going on in Alberta. The forestry industry's done well. The ag sector's done well, but there's not enough of the revenue there to support things. It's still oil and gas. So that's things that you need to understand in the economy side. Second thing is, as a government, you do what we call as gap action. Gap action means you take a holistic view of your expenses and look at what can I do in terms of reining them in. You put restraint measures in. You freeze departmental spending. You then also look at contracts and negotiation. How you can reform compensation in terms of the classes and the grades, and pension reform. That hasn't been discussed, not just with Alberta, with provinces across, because that's the public sector unions. And they're a huge voting bloc that comes into play, and it's something to bear in mind, the reason why governments don't take it on. The second thing you don't do is you don't shock and awe business with new policies, or policies like adding carbon taxation, or changing rules of corporate taxation, or bringing in a PST proposal, right? You don't shock and awe an economy that's struggling. What you do is you say to business is, I will help you right now, but in the future we may look at increasing taxes to be as part of the overall gap analysis and closing the deficit down. Business wants to know and will invest, a couple reasons, to make a profit, But if they see provinces or countries that are high debt, high deficits, they'll look at that and say that's potentially taxation increases, that's not stable. So Alberta is telling business in a roundabout way, we're not that stable right now. You may have future costs to your business, and that's critical when you're making capital investment decisions that are long term, because any sort of capital investment is long term. So when you look at discussions with your MLAs and your discussion with your coffee shop, you need to drive back to these politicians that an economy drives revenue. If you're going to hurt an economy, then you're going to hurt your revenue. So that's one point. Second thing is, you also need to talk to them about the debt. Higher debt also leads to potential problems down the road that may lead to future revenue hikes or future spending cuts. The other thing that debt does, it also takes your debt out to the marketplace. Bond rating agencies look at that. If they downgrade your debt, it means the bond raters are going to want a higher premium for your bonds. Higher premium means higher yield for those bonds. Higher yield for those bonds means higher interest rates. So that's something to bear in mind too as well as you look at the debt and deficit ratios, because bond raters are going to look at this thing and see how healthy your province is. And that's not a good thing if you start seeing the downgrades. That's not good. So in a roundabout way, there's some tough decisions that are going to be made by Alberta as part of they move forward, but did they actually make the proper decisions in terms of setting priority? That's up for debate, and that's up to you people in Alberta to question your politicians on what you should have got out of this budget. Thank you.